first article today is the VA introduces new last resort loan program to help roughly 40,000 veterans keep their homes. Brian actually brought this to the table. Brian found this on military.com. This was really refreshing to see that there's a solution, but I was honestly surprised at how much work had been going that I did not know about and we just hadn't heard about in the mix of all the news and everything. I hadn't heard about how many people have been saved in 23 and 22. So let's just unpack this together real quick. So
I can't take all the credit. I'm going to give a shout out to Cristian Torres Sanchez. I actually saw him. He was the one that posted this article, and then I was peeping top, so I went to go check it out. So shout out.
This is good information.
Torres Sanchez. One of the things I got from this, just breaking it down, is I didn't know that after COVID, they basically, all the people that were already in default or already basically on the tail end of basically losing their house, they kind of got screwed over because there was no other help, and they were already struggling through that. So when that moratorium came out, boom, here's the bill.
Yeah, well, here's the bill. A lot of times the servicer, depends on the servicer if they want to go ahead and modify that, right? But a lot of times they put it as a silent second there. So if they refinance down the line or if they did anything, that's when that would come into effect. Mm-hmm. But every servicer was going to operate different. So this is very refreshing. My only thing is, the VA is going to be the servicer now?
So let's talk about some of the details of this. Okay, so this new last resort loan program is intended to help 40,000 veterans who are at the highest risk of foreclosure. Now, a little bit further down in the article, there was a report for NPR talking about 6,000 VA homeowners who were in the foreclosure process at the time. At the time this was when this was being rolled out, while another 34,000 were delinquent. Okay,
Nuts.
So but here's what I need to point out. There's another part in the article. There's 3.7 million veterans that have a VA guaranteed home loan right now. So just over 3.7. The quick math on that is this 40,000 of that 3.7 is roughly 1.08%. So you have about 1%, which are in significant risk at default.
Yeah.
So what they're going to do is they're going to allow the VA to purchase defaulted VA loans from mortgage companies, modify them, and then put them into the VA's direct loan portfolio.
Yeah.
So this means the current servicer that's on the books is going to be off the books. The VA is going to take that back. One of the things I was thinking about is there are folks here who might be in trouble who are also receiving VA disability or some sort of compensation.
Yeah.
And it's basically kind of circulating through the system then. Because on one end, the VA is paying out this, let's say, benefit to the VA borrower. And if they are in trouble and the VA is taking over that loan, the VA is recapturing that. So there's going to be a part of this where I don't know how much of it's going to be baked in, but there will be a part where there's like a disability payment cycling, because they mentioned in the article that they're actually going to have a savings. The new program is projected to be a net revenue positive for the federal government, resulting in benefits reduction of $1.5 billion over 10 years. That's because the savings associated with foreclosure outweighs the cost of purchasing the loans.
Which is awesome. And it's crazy because they're actually going to be providing a 2.5% fixed rate throughout the end of the term, which is phenomenal, right?
Yeah, that's the other part of this. So the other feature here is the VA will purchase delinquent loans from holders and become the primary loan servicer, like Will was talking about, providing borrowers a stable payment plan at a fixed rate of 2.5% for the remainder of their loan.
So those of us that said that 2.5s will never come back again, there it is.
Well, that's not open to the market. This is people in substantial default. From the way it's written, this does not sound like an open invitation.
Correct.
My initial caution was, this is going to be an invitation. People are going to just go right into default and then go file, and they're going to find themselves on the outside looking in, but that's not what this is.
So they mentioned that it was a last case resort, and veterans cannot apply directly to the program. You basically are going to get handpicked based on the people that are already basically at the highest of that margin.
Yeah.
Yep. It says right there, let's be clear, VASP, right?
Yep.
Is the last resort option that may be available.
Yeah. And to your point earlier about the whole COVID thing with the deferred payments, like a lot of people went into that with the assumption like, oh, it's okay, I'm just going to start paying you when I can start paying. But you still owe all that is back paid. And people, some folks that we've even talked to, they failed to read the fine print or just read the document that was sent in the agreement that, hey, when your loan comes due, all the back pay is due too.
Yeah.
So folks who were in that situation or either didn't look or maybe were actually unable to. So it's kind of multiple scenarios. I signed the paperwork for the deferment, but I didn't look. And there's people like, I actually can't pay. and then doesn't matter when it's coming due, it's due and you owe it all.
And here's the thing, guys, we gotta not, we have to have a better understanding. Every servicer is not going to do the same thing as the other servicer. Everybody has their own guidelines that they follow. I had a client that they went like 12 months without making their payments. So they had a second. And then the rule was that you cannot charge any interest on that forbearance payment that you had. Okay. So what they did is they combined it with this first and modified this first into second, but he already had like a 4.5% interest rate, and they brought him all the way down to 2.75.
Wow.
So that was great for him. Wow. Where I've heard other stories, that it wasn't as a huge benefit that way.
And it sounds like you're talking about a person who was like understanding what the deal meant and what it meant.
Correct.
And was, let's say, actively involved in the process versus totally hands off, look the other way, or put your head in the sand and, I'll just go deal with that later. But deal with that later meant, you owe us a bunch of money. Yeah. And then now the solution is you either pay us, and if you don't, the servicer has to decide, I want to modify. If the servicer doesn't want to modify, they're going to just put you into the pre-foreclosure process.
Yeah, and that's one of the things that I went in there because I was very interested. Well, what is it going to take to qualify, right? And this is only certain targeted groups that are going to be, and this is our people. I don't know exactly what's going to determine if I'm going to pick you, right, Brian? It just really depends on that certain situation of that person. But it's targeted groups. It's loan status currently of what's going on if they're in default, not having a job. Like, who knows how they're going to get handpicked for this.
Yeah.
Good insights.
There's one thing that they do say here, which I think is important for everyone who might be hearing this or had heard about this and kind of found this segment of the show because of the article or needing help, is this cannot, so this is for people who they cannot resolve their delinquency through traditional VA home retention options. So the VA does have other retention options which are not discussed in this article. And those are, it sounds like those need to be attempted first, and this really is a last resort.
Correct. And this program is going to start May 31st of 2024. So if you do find, and you're a veteran or active service person, and you guys are having these issues, you may want to contact your current servicer to see when, what, if you qualify for this program.
What your choices are. I mean, and just for
that's what it is.
Just for disclaimer purposes, even this article, the VA officials stress that the program is only for those facing serious delinquent and serious default situations. If you are not in default, this program is not for you. You have to be in default, and you have to be in default a certain amount of time. And this is from John Bell, the executive director for the Home Loan Guarantee Program at VA. So from the horse's mouth, as they say.
Yep.
And then just some advice, veterans that don't qualify but are still facing financial hardships, definitely, be proactive, talk to your servicers before you get into, heavier waters, because then you won't have options at least beforehand. You'll be able to have some more wiggle room.
Well, I guess this is all happening. The reason why they even want to do this is because before it goes through foreclosure proceedings, that costs money. You hire an attorney. Certain people are coming in, and you already know lawyers take a lot. They become expensive. So what we want to do is, I laugh because of the whole NRA thing, and
NAR.
You see, that's how bad it is.
That's okay.
Now.
We could talk about NRA in a different show.
NRA. But that's how it is, right? Like, we just gotta now try to avoid going through those proceedings where it's going to cost, the banks and the servicers a lot more money. That way, hey, how do we just help the client, kind of detour from that?
Yeah, help the homeowner, right?
Exactly.
Because someone's going to be left holding the bag at the end, right? Because if the VA gets, if the servicer is going to default, if the borrower has, the homeowner and the borrower have defaulted on the loan, and the servicer's like, hey, we got to go to foreclosure. Well, the VA guarantee is a partial guarantee towards the servicer, and so they're eventually going to have some sort of cost associated with that going back into into default. So if the benefit to give and take is, well, if we step in proactively and help these people stay out of default and then bring it under our camp, then that we're already going to have some expense for doing something.
Exactly.
If this is less expensive, then all the better. The veteran gets to keep their home. The interesting thing to me is that this is happening because they've already helped 145,000 people in 2023.
Yeah.
That I was not expecting. I did not know that there were that many people.
Yeah,
so
me neither.
in 2023, the VA helped 145,000 veterans avoid foreclosure and stay in their homes. So now we have the this program, right? The last resort program, which is going to be another 40,000. That will take the total in 24 months to 185,000 homes or veterans in their homes being saved by the VA.
That's crazy. And again, I think the government's understanding what happened in the mortgage meltdown back in 2008 when they would just foreclose, you know? You had all these companies just, these asset managers just putting these properties out on the market, getting realtors to put them out on the market. And then we got really inundated with a bunch of homes on the market. And that's when people weren't buying. And when you have a bunch of supply out there, what causes now it's a buyer's market, the prices have the tendency of going down. This COVID really taught us a thing. When they had that moratorium, people aren't paying, it really taught the homeowner, well, if I don't have to make those payments, it's going to allow me to put myself in a better position because now I can save what I wasn't paying. It's okay if it gets tacked on. But now I can pay some of the things that are a lot more important for us right now so that we can just continue moving forward. And this is a great rule because they see that understanding that working with the actual homeowner may far greater benefit everybody. It's like a win-win.
Yeah, I mean, because it's kind of like the bill's coming due, right?
Yes.
So the bill's going to come due to you at one point or another. I mean, think of it this way. So I just did some math here. It's not accurate, but it's just about 5%.
Pretty close.
So it's just about 5%. So a minute ago, I'm saying it's, 40,000 of 3.7 million is 1.08%.
Yeah.
Well, 185, so 2023's plus this new 2024, so 145,000 last year, 40,000, 185, that's almost 5% of 3.7 million. And now that means that VA is potentially experiencing greater default rates than they have historically ever done. Because we talk commonly that VA has been the most historically lowest default rate of all mortgage programs.
Correct.
But if you take a snapshot in time of this last 24 months, it doesn't look like that's true in this little snapshot.
Yeah.
If now cumulatively approximately 5% of these are in some sort of default or avoiding foreclosure. That's actually a really big deal.
Yep.
So these are now on the other side of the coin, people go, oh, that could be inventory for the market. Yeah, it could be. It'd also be people out of homes, and then they're just going to be displaced and going somewhere else. So it's a swap of inventory, if you will. It doesn't necessarily predict that it's going to become new buyers that buy that. It could be investors or whatever. But
it's a win-win. Everybody, banks still make money. They can still do what they got to do, and everybody can still have a house. So I think it works. Everybody got to get their cut. So I think it works out for everybody.
And I think if this is successful, we're going to see more of this because we've talked about creative solutions in difficult times ad nauseum on this show. But I think this 40,000, it's likely to be a lot more than that.
Yeah,
I mean,
absolutely.
This is probably scratching the surface because, again, I'm looking at this one line that just says, in 2023, the VA helped 145,000 veterans avoid foreclosure. That was last year.
Yeah,
so wait. So 40,000, is that it now?
Yeah.
No. Probably
There's
not.
more to come.
There's probably more.
This opens the door for other types of servicers or other programs to come about to start helping, because if it goes well here, well then, hey, we're saving money. It's going to cost less to help rather than to just take the asset itself, and then now you're at a real loss.
Exactly.
Cut your ties. At least now you can recuperate your investment on the loan that you did to the borrower and make your investment back over time slowly. It doesn't matter.
And to your point, all servicers are different. There might be servicers that go with that VA program, or other servicers that go, well, if they're offering that to you, well, I'll just do that for you.
Yeah.
Because I'd rather just keep your payment. So maybe this is helping absorb some of that potential increase of people needing help. I'm projecting there might be more than 40,000 that need this, but I think maybe having the program in place allows the servicer to go, well, maybe I want to do that same thing. Maybe I can financially do that, and that's better for me than just giving over to the VA and getting it off my plate.
Exactly.
I don't know.
Again,
this is intriguing to me.
Hey, another disclaimer: veterans will not apply directly to the program. Okay,
no. Right.
Which will begin on May 31st.
Yes.
Instead, mortgage holders will identify borrowers in need and submit requests to the program.
Yeah.
So
on behalf,
yeah.
If you are like, hey, I know we don't have to pay attention to it. If you're going through a certain situation, call your servicer.
Yeah, you can call your servicer directly, and if you do have something you need to reach the VA for, they provided a link here in the article. I'll put it in the description box.
Yeah.
They have a housing assistance website, and they also have a phone number. So 877-827-3702.
Yeah.
Any last thoughts on this one, guys?
No, I just think it's great. It's a win-win all the way around.
Yeah.
Again, COVID taught us that, and that's why I think servicers and asset managers aren't so quick on just putting homes on default. Everybody's thought it's going to be like 2008. We're going to see like the mortgage meltdown, all these homes being out there. But no, I think servicers learned a lot through this, pandemic that we had. There was a lot of learning in so many different ways.
Yeah, this is definitely a stopgapping tactic. I think there's going to be more of that. I'm really interested to see how this plays out. And I'm really happy to see the VA do that. That just makes me feel like confident in in a very lack of confidence I've been having in some other things I'm seeing regarding the VA, this is confidence inspiring.
Yeah.
I like it.
Thanks, Brian, for bringing that article.
Yeah.
Brian, thank you so much. Welcome back to the show, Will.
Shut up.
Since we're asking for recognition now.
Yeah.
Give me my love.